Financial projections are a necessary and extremely important part of the business valuation process. Glossing over this mission-critical element of evaluation can be a serious mistake. Projected benefit streams are used in the discounted cash flow and discounted future earnings methods, and may also be used in the market approach. The available information for creating projections can vary widely. You might be provided projections by management or the client, but sometimes the client only has a projected income statement, no balance sheet, no cash flow. Or, as is often the case, you'll need to prepare projections yourself, working, hopefully, with the assistance and guidance of management. When it comes to preparing projections, flexibility is as important as completeness and calculation power. And that sets the stage for this tour of the projection engine that's included in MoneySoft Business Valuation Specialist. You can use BVS to prepare a comprehensive set of fully linked line item projections of the income statements, balance sheets, statements of cash flows, statements of retained earnings, and sources and uses of funds for up to 10 years. Projections for the first 2 years can be prepared on a monthly basis. One section of the program is devoted to inputting assumptions, and the other presents the actual projections, supporting schedules, and related analysis. Let's start with the assumptions. BVS gives you control over line item projection assumptions for such items as revenues, expenses, taxes, the line items related to working capital, CapEx, depreciation, interest expense, and debt repayment. The key is the Account Assumption Control Panel. The Assumption Control Panel varies based upon the characteristics of an account, and all of the items in this section have unique assumption control panels. Generally, there are two parts to an assumption control panel. One for account selection, and the other to assist with forming and inputting the assumption. The items on an assumption control panel will vary according to the type of account. This is how the control panel works for the income statement accounts. The accounts are on the left. Select one by clicking on it, and then the historic data and the assumption controls appear on the right side. BVS gives you a flexible palette of growth options. There is trend line, historic average, variable percentage growth, manual input, and custom link. Manual input is appropriate if you have specific amounts that were provided by management. A custom link is useful when you want to create a relationship and link this account to other accounts. For illustration purposes, let's select the percentage growth option and assume that this line of revenue is going to grow at a ridiculously high rate of 50% each year. Here you'll see the growth rates for this particular account for each year, and it's set to 50%. Now, by clicking on the Show Projections button, you can immediately see the projected results of the assumption for any line item. Here you can see the revenue account with the 50% growth. Next, let's look at the assumptions for an expense account. Let's select the Other G&A Expenses. The available growth methods include historic average growth and historic percent of sales. Both of these rates are in the stats above. Manual percent of net sales lets us use our own percentage of sales. Then, like the revenue account, there are options for percentage growth, manual input, and custom link. So what happens if you need to include line items that don't exist in the historics? Well, BVS gives you the ability to add new revenue and expense accounts as needed. Once you select an account and give it a name, you can add assumptions for a base amount, start year, and a growth method for each new account. There are no historic options under the growth method because this is a new account that did not appear in the historic and normalized financial data. Perhaps you noticed the button on the income statement assumptions called Print Percentage Assumptions Database. This provides a summary of the assumptions for each income statement as well as balance sheet account. The assumptions also flow into the report writer so you can support your projections. Again, you have control over every income statement account. Now let's move on to setting tax-related assumptions. Let's select the federal income tax account and take a look at income taxes. These assumptions are extremely flexible and allow you to tailor the income tax calculations as needed. You can select to use the tiered federal income tax table, a historic percent or manual percent of pre-tax income, or of course manual input if you have tax numbers from management, or you can create a custom link. You can also set assumptions for state, local, and other income taxes. There's also a tax worksheet where you can fine-tune taxes by including adjustments and credits. We'll look at this in a few minutes. The balance sheet assumption control panel works much the same way as the one for the income statement. The main differences are the historic stats and available projected growth methods. For example, let's take a look at trade accounts receivable. The historic stats are similar to those for the income statement accounts, but there's also an option for the historic turnover ratio. The growth methods also include historic turnover and manual turnover options. Here we're going to use a manual turnover ratio, and the projected accounts receivable balances will fluctuate with revenues and this turnover ratio. Projected inventory and accounts payable can also be based on turnover ratios. Other working capital accounts have different growth options. Assumptions about fixed assets can have a significant impact on projected cash flows, and these items are often overlooked or oversimplified because the calculations can be complex. BVS includes flexible and powerful calculations for all aspects of projected fixed assets. Here you can control all of your assumptions for depreciation. The global settings give us three options. The normal setting lets us set assumptions separately for each fixed asset line item. We'd select a fixed asset account from the list and then set depreciation assumptions for it, including straight line or declining balance method, useful life, and salvage value. We'd use the manual setting to include specific depreciation amounts provided by management or the client. If only limited information is available, the automatic setting will create a simple estimate of projected depreciation for us. Here you can include fixed asset disposal assumptions for each account. Assumptions about projected capital expenditures are important because CapEx may be required to support revenue growth, and they can have a material effect on cash flow. Here's where you enter fixed asset purchases for each fixed asset account and for each year. The Fixed Asset Requirements Monitor shows the amount of CapEx needed in each year based on projected revenue and using the selected turnover ratio. This monitor is updated in real time as you make your purchases and provides you instant feedback on the remaining purchases. This control panel lets you finance your fixed asset purchases. You have the option to finance purchases all or in part in each projected year. Payments on long-term and short-term notes payable can also have a significant effect on projected cash flows. For example, there may be a long-term note payable that's been amortized over 5 years, but with a balloon payment due in year 2. The payoff of the loan balance in year 2 might cause a significant decrease in cash flow, especially if the business has impaired credit and can't readily replace the loan or roll it over. BVS includes flexible payment options, including amortization or direct reduction, balloon payments, interest-only payments, and principal-only payments. principal reduction is automatically reflected in the projected balance sheets, and interest expense is reflected in the income statements. You also have the flexibility to control revolving lines of credit and add new term debt if needed. In addition to the income tax assumptions mentioned earlier, this income tax worksheet allows you to adjust income taxes based on the company's specific tax situation. Here's the control panel that lets us add adjustments and credit line items for federal, state, local, and other income taxes. Adjustments change the pre-tax net income used to calculate taxes. Credits reduce the tax liability dollar for dollar. BVS automatically prepares the projected income statements, balance sheets, statements of cash flows, statements of retained earnings, and sources and uses of funds based upon the assumptions entered in the various control panels. The information in these projected statements is used to derive the benefit streams that'll be used in the discounted cash flow and discounted future earnings valuation methods. If monthly projections are enabled, you can switch between annual, year 1 monthly, and year 2 monthly views of the projected financial statements. These supporting schedules include a summary of the benefit streams, loan amortization, and depreciation tables, and projected Z-score and sustainable growth analysis. Financial projections are really important. They need to include sufficient detail to reasonably estimate future benefits, the adequacy of capital, and the future financial footing of the business. Your valuation of future benefit streams can only be as good as the reasonableness of the assumptions that go into them. BVS gives you the power and flexibility to effectively create a full set of comprehensive projections that'll be used in your valuation. After creating the projections, you have all of the historic and projected information in place to start the valuation. Thanks for watching.